Welcome to Morphic Labs, and today we are going to be discussing order book and balance aggregation. But before we get into that, do me a favor, hit the subscribe button if you want to keep up with more content like this. And if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data, and analytics, plus a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven and hybrid methods aggregation, implementation and selection criteria. If you're interested, the links in the description. You gotta sign up to be a free member and you have it all to yourself. Now, what is an order book and balance bar? Order book and balance bars aggregate based on the imbalance between bid and ask quantities in the limit order book, capturing the pressure from pending orders. Order book and balance bars. These bars close when the cumulative order book imbalance exceeds a threshold, reflecting the net pressure from resting orders. The formal description. Order book imbalance is defined as I sub t equals Q sub t to the bid difference Q sub t to the ask over Q sub t to the bid plus Q sub t to the ask, where Q sub t to the bid equals total bid quantity at best levels, and Q sub t to the ask equals total ask quantity at best levels. Cumulative imbalance is defined as theta sub t equals the sum of I sub t times V sub t, where t indexes from 1 up until t, where V sub t is the trade volume at time t. The bar closed condition is defined as the absolute value of theta sub t is greater than or equal than theta sub threshold. When do you use this type of aggregation? Short-term price prediction, market making inventory management, liquidity monitoring, high-frequency signal generation, order book dynamics research. The advantages of this type of aggregation: uses forward-looking order book data, predictive of short-term price moves, captures supply-demand imbalance, more informative than trade-only data, real-time signal generation. What are the disadvantages of this type of aggregation? Requires L2 market data. Book depth varies by venue. Spoofing can distort signals. Latency-sensitive implementation. Threshold selection is challenging. Now, let's get into the code. I'm going to be running this on my Bitcoin L2 end price data. Here's the price data. As you can see, it has the size, and over here we have our L2 data. As you can see, it has the level at which the order was at, and there's the price bid, price ask, size of the sequence, etc. Typical L2 data values. Now, I already ran this, but I'm going to show you what I got. So essentially, I'm running this on 10 entries on all 4 variables, which is going to be Q bid, Q ask, our volume, and our price, right? Essentially, the details are over here, but that's not really important right now. Let me just take this back to 1. Now, let's run this on the first 10 entries. And you can see our average theta is not a number, right? So if you go look, there is no bar close condition being met, right? And essentially, our average theta is not being met in this case, right? Because it's just too short to really have anything of interest. And again, it's most likely because of this threshold. Remember what one of the disadvantages were, right? Threshold selection is challenging. Let me show you what I mean. Let me switch it up. Let me go from 1 to 0.1 with the just 10 entries, right? And my average theta is still not a number, right? To see that this is true, let's go look at our plot. Look. Okay, let me just, okay. Oh wait, okay, here it is. Look, there is no bars being closed. There's no bar condition, right? But if I switch it up, let's see if there is. Average theta is still not a number, right? Let me see if I could squeeze out something out of it, right? By forcing the threshold to be small. Now our average theta is 73,102.85. Let's go look at our plot. And as you can see, there was only one aggregate, just one bar close, right? I mean, what do you expect? It's only 10 entries. But let me make this slightly bigger, 0.01, and just increase the entries from 10 to 50. Now our average theta is 73,089.97. Let's go look at that. As you can see, we have 1, 2, 3, 4, 5 aggregations, right? No, 6, 7, I mean, 6, 7 aggregations. Now, essentially, I'm going to keep pushing this. Let's go for 80 entries. With the same threshold. Now, our average theta is essentially picked up, not by much, by just a couple points, right? It went from 73,089 to 73,096, right? Now, if you look at it, we have more aggregates, right? We went from 6, 7 to whatever this number is, 6 plus n, whatever. But there's something that we're missing, right? We have to pay attention. Let me just... Okay. Just want to display a hidden plot. Now, over here is our I sub t, right? Back to the definition. This is our cumulative imbalance, right? And when you look at the cumulative imbalance, it's all over the place, right? It's the low negatives, and then it peaks up to the positives, and then goes back to the lows, picks up back to the positives, and then it's all over the place, right? And now what I want to do is show how it looks on more data. I'm gonna just go 150. Now our average theta has actually decreased, right? Let's look at it. And as you can see, this is our cumulative imbalance. It's all over the place, but the bar closes obviously represent our condition where the absolute value of theta sub t is greater than or equal than theta sub threshold, right? And our threshold is 0.01. Now, I'm going to display another hidden plot, and this one is theta sub t, right? And when you look at theta sub t, it's all over the place, but the place where our threshold is met is just about here, right? It's just about here. Now, what I'm going to do is I'm going to increase the sample space, take it to 400 entries. Our average theta essentially decreased, went from 73,095 to 73,091, right? Our threshold is still the same, 0.01. Now let's go look at it. As you can see, the theta sub t is essentially being hit right around here. And as you look at I sub t, it's all over the place, right? When you look at the closed conditions, every single red dot represents where our bar condition was met, right? Essentially, the bar condition can be negative. You can just put a negative sign over that. And as you can see, far more bars with a negative threshold. But obviously, this is one of the disadvantages of this aggregation. Finding the right threshold is a skill in itself. But if you want to find the right threshold rigorously, my market microstructure and trading systems course has the secret sauce, right? At 3.1.10, more specifically parameter selection, these are all the 3 ways you should pick your threshold when you're trying to actually build strategies or put your money at risk. This is not financial advice, but if you are going to put your money at risk, you have to use this parameter selection criteria, which is percentile-based threshold selection, event-based threshold selection, and volatility-adjusted threshold selection. Now, I'm going to push this to 1,000 entries. Our average data decreased, right? Went from 73,092 to 73,062. Now let's go look at the geometry. Now, as you can see, I sub t is all over the place, right? And when you look at theta sub t, obviously the threshold is just 0.01. It's not really picked rigorously, so of course it's going to hit it a lot of times, especially when you look at the geometry of theta sub t, where you can see that essentially on average, at least from what I can see, theta sub t seems to be bound, or at least it bounds about right very. Let me just say this, just to keep it simple. Theta sub t seems to, at least on average, just hover around our threshold, right, 0.01. But if you're going to actually use this for actual trading or actual strategy development or backtesting, you wouldn't use that threshold, right? You would use the perimeter selection strategies in my market microstructure course. But that's about it for today. If you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data, and analytics. Plus, I have a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven and hybrid methods aggregation, implementation and selection criteria. If you're interested, the link's in the description. Just gotta sign in to be a free member and you'll have it all to yourself. And if you're interested in more content like this, hit the subscribe button, man. It's about to get interesting, and yeah, I appreciate all the subscribers. It's only been, I think, a month of having the channel up, so just wanted to give a quick thank you to all the people who subscribe to the channel, and I'm out. Bye.